Saving America one entrepreneur at a time, it's the Biz Wrap Podcast with your host, Michael Manahan. The show that celebrates small business and entrepreneurs, it's Biz Wrap Radio with your host, small businessman, educator, and author, Michael Manahan. And welcome to another edition of Biz Wrap Radio. It's your host, Michael Manahan. Hey, thanks very much for joining me today. If you're new to Biz Wrap Radio, we are the show all about small business and entrepreneurs. Yes, indeed, the lifeblood of the American economy. Hey, don't let those folks in Washington fool you. It's not Wall Street and the big, huge corporations that keep this country running. It is the small mom-and-pop stores, the small entrepreneurs, the people in your community that own businesses, hire your kids, probably hire your neighbors, maybe even hire you. Did you know most people in the United States actually work for a small business? And as we pulled out of the recession, most of the new jobs were created by small business. Yet there's a war going on here in this country. Every time there's a recession, what do? Are they bailing out the small businesses? No, they're bailing out the fat cats on Wall Street and those inefficiently run huge corporations, just so they can get a bunch of political contributions, I think. But we're here to support small businesses. We're here to help you. We want you to do better as a small business operator. I want every small business in America to make a profit, and a nice big fat profit. Yeah, it's not a dirty word. You need to make a profit. Now, what you do with the profit, that's the key. And here's what I suggest you do with it. First of all, you take care of yourself and your family. Then take care of your employees. And then take care of your community. And I see so many small business people doing exactly that. You know, if you watch Hollywood movies, you'll see a trend. The trend in Hollywood movies is corporations, businesses are all run by these evil ogres whose sole purpose in life is to screw their poor employees to the wall. But, I know many business owners, literally, not only in California, but across the country. And most business owners I know care deeply about the people who work for them. I have seen business owners bend over backwards to take care of their employees through sickness, through family trauma, through emergencies. I've seen businesses where the business has dropped off because of the recession and the owner is dipping into his savings to keep the people on the payroll. So he doesn't have to lay those people off knowing the suffering, the consequences that results in. So could we change our tune a little bit here? Could we stop demonizing businesses? In fact, most businesses in America, and I think there's somewhere in the neighborhood of around 30 million of them, most of the people running businesses are just your average, everyday neighbors. They're great people. They care about other people, and they're doing a job that we really need them to do. That's enough of my ranting and raving. I want to talk today about finance. As small business people, and when I say small business people, I'm talking about maybe the company that does a couple of $100,000 a year, but there's a lot of what I call businesses in the U.S. that they're not billion-dollar corporations, but they're doing 20, 30, 15, $50 million, even $100 million, and a lot of these businesses I see do a really poor job of managing their finances. They have poor financial strategies. Their accounting is often poorly done. Their accounting is often behind. And they really don't know what to do about it. They maybe don't want to go out and hire a $250, $300 a year chief financial officer, so they try and make do with somebody who costs them a lot less, but that person who costs a lot less may not be able to do the job. So what do? Well, I can tell you what you do. You contact my good friend Gene Sciliano. He's with CFO for Rent. He's joining me in the studio here today. Gene, welcome to the show.
Thanks, Mike. It's great to be here with you today.
Okay, so give us the story. What is CFO for Rent? What do you do?
Okay, and let me go back and start from the beginning. 30 years ago, when I decided to set up a consulting practice, and my expertise was finance and accounting and those kind of things. And I looked for a way in which I could be of value to companies that were smaller, because, as you've just said, there are so many of them in this country that don't have the right skills on their team to do what they need. And so I was actually sitting with a company that I was attempting to sell different kinds of services to, and it was clear that he didn't need a full-time anything, but he needed some expertise that was greater than what he was getting. So the vision in my head was the highest level of expertise you need, but only for the amount of time you need it. And so out of that was born the idea of a part-time CFO or part-time controller in a contract mode, so there's no long-term commitment by the company, but they get the information and they get the expertise and they get the advice that they need, but only the amount that they need for that situation that they're in at that moment. And that's how CFO for Rent was born.
Wow, and hang on, did I hear you say 30 years?
Yes.
Wow, that's amazing.
This is my 30th year.
That's incredible. It just makes all the sense in the world to me. I mean, look at I don't maybe a $1 billion corporation has an in-house counsel, but most companies, they have an attorney and they call the attorney when they need them, and sometimes they have them on retainer. They so much a month, but the attorney's not there every day. And they have similar arrangements with other professionals, and yet we don't see at least I don't see it out there, this kind of part-time CFO as perhaps predominantly as I think it should be used. Why do you think that is?
Well, then that certainly is the way I saw it when I first started this business. So it made for a slow ramp up for sure. But I think the reason is because business owners are very sensitive to some elements of their business. And if there's one area that's at the top of that list in terms of sensitivity, it's their finances. It's how they run their business, how much money they're making. Are they losing money? Do they have cash in the bank? All those kinds of things that are very sensitive to a business owner who wants to be able to have a profit and do the things that you talked about earlier. So they weren't willing to trust that to someone who was not a member of the family, if you will.
Yeah. Mm-hmm.
And so it was a slow start, and I remember at one point I connected with a bank president and had him introduce me to all the bank presidents in the area. And I literally went around and visited each of them, because I know that banks are the people that want to get that financial information from small businesses, are most unhappy when they don't get it in an acceptable form, and when they're a lender, most at risk
right
at that time. So they became the way to convince business owners that they needed higher level of expertise, but if they didn't need it full-time, fine, here's an option.
But to me, it's just a great idea. Now, have you found that the market has changed? Are people more receptive? Do they understand what you're talking about? Or is it still kind of, what? I've never heard of that before.
Actually, it's much more broadly accepted today and has consistently grown that way over 30 years. While I was the first in the business doing that in the country, as near as I could determine at the time, there are today dozens, if not hundreds, of firms across the country. Very often they're small virtual firms like mine. I have a group of a half a dozen people that I work with and I put into companies. There are a couple of very large firms that do this, but it's now an industry because business owners have accepted that this is a viable option for them.
Well, it's amazing and a great story. And obviously you're successful at this because you're still around after 30 years. Look, Gene, I want to give out your contact information here. Your company is CFO for Rent. If somebody is interested in your services, perhaps inquiring to see about a part-time controller or a part-time chief financial officer, go to cfoforrent.com. That's cfoforrent.com. And it's Gene Sciliano. You can contact Gene through his website, and I'm sure he'd love to talk to you and see what your needs are. And Gene, that's something I like to get into. How do you determine, and we can't have a huge conversation about this because we're coming up on a break in about a minute and a half, but how do you determine if a part-time CFO or controller is right for the business?
Good question, Mike. What I typically do is have an interview on the front end, and an interview should properly lead to an assessment of their financial department, which is kind of a miniature management audit. So I'll get into the company and I'll look at the quality of their work. First, I'll ask the management of the company, what do you want from your finance department that you're not getting? And then I will go to the finance department and ask them, well, they've told me that they want this. Do you know that? Why are they not getting it? Show me. Mm-hmm. And so I'll look at the work product that they're producing. I'll look at their files, look at their processes and procedures. I'll look at the technical capabilities and resumes of the staff, and I'll be able to tell where there is a weakness and what the cause of the weakness is, just because I've been doing this for so long. So now I can go back to the company and I can say, here's the problem, here are the problems, here's what you can do about it, not should necessarily, can do about it. Give them a written set of recommendations, and if they accept those, I know what level of person to put in and for how much time.
That sounds just like an absolutely fabulous strategy. Look at it is Mike Manahan, BizRap Radio, and I'm here with Gene Siciliano, CFO for Rent, and we're going to be right back after these messages. And welcome back to BizRap Radio. It's your host, Michael Manahan. Thank you for sticking with us today. And if you just joined us for the show, we are in studio today talking with Gene Siciliano, CFO for Rent. And again, Gene, thanks for joining me in the studio today.
Thanks, Mike. Again, great being here with you.
So just to summarize our last segment, Gene is introducing us to the concept of a part-time chief financial officer or part-time controller as kind of a strategy for managing the finances of a business for that business that just may not be able to afford the cost or perhaps even need somebody full-time in that role. And Gene was talking a little bit about how he goes about auditing a company and looking at what they're doing to see if this is a service they could use or not. But Gene, you've looked at obviously the financial, department, the financial reporting, the accounting of hundreds and hundreds of companies. Just as a general comment, how many companies do you come across that you think are doing a really good job of managing their financial department and their accounting department?
Okay, and we have to exclude from that all those companies that exist that don't ever call me in, so I don't get a chance to look. But of those that I look at, virtually 100% of them have flaws in their accounting. And I would say 90% of those, the flaws are material enough to impact their profits, their reported sales. Their balance sheet typically is a disaster because small business owners look at their P&L statement. Mm-hmm. They don't look at their balance sheet much because it's just stuff sitting there.
Right.
They don't ever look at their statement of cash flow, even when their cash is tight, which is just amazing to me. And there's so much information there, particularly if you get the numbers in the right place. And I think you gave an example earlier when we were talking about balance sheets that are we were talking about a client that the accounts receivable was just not in shape at all and not things not being credited to the right customer and so forth. Those are the kinds of things that small business owners don't pay much attention to. They tend to pay attention to the cash in the bank, and if they have cash in the bank, it must be okay.
Right.
And you and I know that the flow of activity is such that that's not the case. And so we really try to get them to understand all the flaws in their financial reporting, because after all, that's the product of the accounting department for them.
Sure.
If you don't get financial statements that you can understand, that are correct, two kind of critical things are correct and you can understand them,
right,
they're largely useless, and that's scary.
Yeah, I think that is such a great observation. So many companies produce financial information that really is useless in terms of running the company. And, of course, as you know, I'm a professor of accounting. I teach accounting at California State University, Dominguez Hills. I teach both financial accounting and managerial accounting. And what I often see in companies is they may do, and just so the audience understands, financial accounting is more your financial statements and what you would give to your bank or what your CPA might use to file the tax returns. It's that kind of reporting. Managerial accounting is more internal reports and analysis that are actually used to make decisions within the business. And what I see is some companies maybe do an okay job of producing a financial statement that goes to the bank or goes to their accountants for the tax returns, but their managerial accounting, financial information that can be used to effectively make decisions within the business, is either absolutely crap or it's non-existent. And as a consequence, the owner is really, he's in a vacuum. He's making decisions without the information that he really needs to make good decisions.
Yeah, that's true. And we can talk about that in terms of companies that are $1 million or $2 million or $3 million in sales. But the reality is that happens in companies that are 5, 10, 15, 20, $30 million in sales and up. If the person who runs the company, and even more importantly, if they built the company, that has not been their focus, and they just ignore that at their peril. And good financial reports, boy, are just the lifeblood of the management information you need to make sure you're making a profit, make sure there's going to be cash there for the next payroll, and to cover your accounts payable and the time they're supposed to be paid, and so forth. The statement of cash flow, which is a very underused report, tells people the difference between the net profit in a given period and the change in the cash in the bank account, which is kind of interesting. I made $10,000 this month, but my bank account went down by $5,000. Why is that? Most folks just guess at that answer or make it up.
Right.
But in fact, here's a report that tells you exactly what that difference is, and yet they don't get it or they don't understand it, which is why I wrote a book on the subject and why it's one of the key things that I make sure every client gets every month. And then I coach them to understand, or one of my team coaches them to understand how to read it and what it tells them and what they should then do about it.
Yeah, I forgot about that, but yeah, you're an author. You've published a number of books, haven't you?
I have.
And if somebody goes to your website, can they purchase your books on your website?
What happens, because I don't want to be in the business of being a bookseller, they can go to my website and it'll link them directly to Amazon or Barnes & Noble so they can buy them online from them.
Okay, well, that's probably an opportune time to give out the website again. Again, it's Gene Sciliano joining me in studio today. He is the president owner of CFO for Rent. And his website is cfoforrent.com, cfoforrent.com. And if you are perhaps a business owner, you're struggling a little bit with your own accounting systems, your financial reporting systems, your management and control of the cash in your business, if nothing else, go to Gene's website and purchase his books. That's at least a start. But if you feel that maybe you're in a situation where the team you've got running your accounting and finance department, you just don't have quite the horsepower you need, but on the flip side, you're not in a position to go hire a $250,000 a year chief financial officer, the whole part-time concept may be just what you need to push your organization up to the next level. And, of course, that is exactly what Gene does. Now, Gene, how long does an engagement typically last if you put somebody in as a part-time financial person?
Good question, Mike. And our contract says it lasts 6 months. And I want people to know that even though our trademark is for a few weeks, a few months, or a few years, the reality is it's something that got screwed up over years doesn't get fixed in weeks. And so we say you have a 6-month contract, and after that you can go as long as you want to go, as long as you think you're getting value from it. So we have engagements that are now in their 3rd, 5th, 7th, 12th year.
Wow. Because
it continues to bring value, and the business owners appreciate that value and don't want to let go of it.
Yeah. Well, that makes sense, because it's like anything. And I think business owners often undervalue what I would call kind of internal knowledge. This is the knowledge that somebody gets in your organization from having been there for a long period of time. There's just the way you do business, the relationships with the customers, the strategies you use, the information you have in an organization. And it always amazes me sometimes that people are so quick to, let's get rid of that person. And very often that person can really, the knowledge they have it's not irreplaceable, but there's a huge cost to switching people in an organization. And so obviously somebody who sticks around a while, I think, becomes increasingly valuable. And I've experienced that because, I've worked with you on a couple of assignments. And, am I more valuable and more effective a year down the road, even though I'm basically doing about the same thing? Without question and absolutely. Why? Because my knowledge base about the individual enterprise has increased substantially. And, every enterprise are like people. Every person is different. Every enterprise is different. Until you get in there, roll up your sleeves, and start to absorb what's going on in that organization, you can't really reach full effectiveness.
I agree, and that's why we try to do that front-end assessment of an engagement when we go in, because if something isn't working and if the management owner of the company first reaction is that person isn't working, let's get rid of them. Completely aside from the inherent cost of turnover, which we know is large and takes a while, it may not in fact be the person at all. It may be the systems, the processes, the things that business owner doesn't understand and therefore doesn't give any credit to. And so very often we find changing the way things get done can make that employee productive again in the role they're in and make the whole thing work more smoothly.
Oh, we're 30 seconds from a commercial break. We got to talk more about that, because what you said is just so true. So we're going to talk more about that. I'm here with Gene Sciliano in studio, CFO for Rent. I am, of course, Mike Manahan, BizRap Radio, the show all about small business and entrepreneurs. And we're going to have more on small business and part-time CFOs and controllers right after these messages. And welcome back to BizRap Radio. It's your host, Michael Manahan. And if you did just join us today, we are talking with Gene Sciliano. He is the owner and president of CFO for Rent. His website is cfoforrent.com. And we have been talking today about the concept of beefing up your accounting and finance team in your business with a part-time controller or part-time chief financial officer. And again, Gene, thanks so much for joining me today.
Great. You're glad to be here, Mike. And it's I appreciate your saying that. I want to add a little something to what you just said to help people understand that part-time controller and part-time CFO doesn't mean part-time employee. It doesn't mean that they need to qualify these people and they need to understand whether they have the technical expertise. These folks are under contract to me, and I put them into a company under contract as well, so they have no employment obligations, no fringe benefits or any of that kind of thing to worry about. And I go through an extensive qualification process of everyone who joins my team. So we know that when I put someone into a company, they have the expertise to do what the company needs and beyond.
That is actually a really, really good point. And just so that everybody knows, I have worked with Gene on a couple of assignments, and he made me go down to his office and take this I'm an accounting professor. He made me take this accounting test in his office. I think I passed, but it was a rigorous test. It wasn't like sit down for 5 minutes. It was a couple of hours long. It was lengthy. It was complicated. And he really vetted me as an individual to determine that I could, in fact, do the job. So that is such an important thing, because one of the problems a lot of small business owners have, you're the president and CEO of a company that's doing $30 million a year. You founded the company, you built it up, but you don't know accounting. You don't understand the ins and outs of debits and credits and income statements and balance sheets. So your ability to hire, to determine whether or not the candidates coming through the door have the qualifications that you need is not very good. But with you, Gene, they don't have to worry about that. Because you do all of that work. You make sure the person who comes out and arrives to do the job is qualified, and you back that up.
That's the idea.
Yeah, that is amazing. Plus, in addition to that, which I often don't think some of your clients recognize, they have you there as an additional resource to assist, if there's problems, issues, and particularly with a lot of the higher level stuff. You're not just getting somebody who's going to come out to your office, a day a week, a couple of days a week, or what have you. You're getting your input and oversight into the whole process.
That's true. And very often there are things that evolve for a company that make that essential, that they get the highest level strategy guidance that they can get. And good examples are exit strategy, which is now increasingly going to be a concern for most of the baby boomer business owners in this country. And so when there's that kind of strategy and that kind of planning ahead that can determine your whole retirement plan as a business owner, you want to have the best kind of advice you can have. And at those times, I will team up with my on-site person and make sure that we give them the questions and help them understand the range of answers and lay out a strategy that is best for them.
Yeah. And before we went to the break, we were also talking about employee performance. And you've seen this, I've seen this. You go into a company, the owner's pulling out his hair, and he's very accusatory about the people who are sitting in the cubicles. They're not doing their job. They don't know what they're doing. They all need to be fired. And when in really the fact is that these people are capable and competent employees, but they're not given the right direction, the right management, the right training. And perhaps even sometimes the expectation is too great. The owner of the company is expecting to get out of somebody who's making $50,000 a year what he really needs to be getting from somebody who's worth $200,000 a year.
That's a good example. And another example would be just unrealistic expectations in general. A manufacturing company where the owner says, I want to have my financial statements 3 days after the end of the month. That's typically not even possible. So very often I have to say to the owners, your expectations are unreasonable, not just for this team, but for any team. And so let's get a reasonable set of expectations, and then let's task your people with something that they have a chance to achieve.
Yeah, that really makes all the sense in the world. In your experience, you probably had some engagements where you put in a controller or a chief financial officer, and after you did that, some amazing revelations occurred. You discovered stuff that literally significant problems in the company, errors, financial reporting mistakes. Can you talk to that a little bit? Can you tell us a story or two about some of the biggest ones you found out there?
I probably could, and my best reference would be some of the conversations you and I have had, because some of the biggest ones have happened in clients that you've been working on for me. But and one example of that was a client that had made, and this is a company that's maybe $30 million, not a huge company, but a good, solid, mid-sized company, had made a $350,000 error in their income statement, which nobody in the accounting staff of the organization knew about until you got in there and found it. That's an awesomely big mistake. And it doesn't mean the people in place were incompetent. It means there was nobody qualified to oversee the coming together of the pieces. I mean,
exactly.
That was just a great example.
Yeah, and then when you're providing financial information to a banker, for instance, and you've got bank loans, and all of a sudden, hey, your financial in fact, I think in most bank loan documents, you're certifying that the financial information you're going to be giving to the bank is accurate, and you could very, very well be liable, at least civilly, if you provide financial information that is not correct and accurate. But if you don't have enough of a team on board to make sure the information you're giving to the bank is correct, you could be in big trouble. Not to mention, if they find out, they could yank your line and put you out of business.
That's probably the bigger risk, for sure. Yeah, I have a manufacturing client that is another great example of this. They do their inventory accounting in a way that is most comfortable for them and, frankly, makes sense. But their accounting system doesn't keep track of the pieces in the right way. So normal manufacturing process, if you get an order for 100 pieces of something that you have to manufacture, and you know there are going to be more orders coming, They might make 200 pieces and put another piece on the shelf and wait for the next order. Thus, they've saved setup time and a lot of things like that. Their accounting system doesn't recognize that and doesn't know how to recognize that. So when they ship the first 100 pieces, all the cost they've expended is attached to those first 100 pieces, and no cost is left to attach to the second 100 pieces. So their inventory and therefore their profitability went all over the map.
Wow.
And those are the kind of things that aren't a function of incompetent staff. They're not a function of anything except the people choosing the accounting system didn't understand what they needed and how to translate what they were going to get. And that's exactly the kind of thing where my people are. We just don't make those kind of mistakes.
Right. Well, that is something that I think people who may be listening to us don't understand from an accounting perspective. Accounting is not really while there is a set of rules that govern how you do accounting. I mean, people have probably heard of these rules, generally accepted accounting principles. The reality is accounting is not a cookie cutter strategy or cookie cutter approach. You've got to look at each individual organization. What is that organization doing and how do they do it? And then adopt within a larger framework those accounting rules and regulations to the business processes in that company. And if you don't do that, you will get what this manufacturer you were talking about, very inconsistent financial reports showing perhaps a huge profit one month and no profit the next month, when in fact neither of those scenarios are true. So you basically end up with two false financial statements. Last month was false, it showed too much profit. This month was false, it doesn't show enough profit. And a good financial person recognizes that and can set up a system that accommodates for those inconsistencies.
Exactly right. And that's why my business exists, to help companies that don't understand those nuances but are being victims of them can fix it and can put things in place that will make it work. Because once they understand, well, in the example of the manufacturing company, if you look at your accounting records, it's going to show that this particular project was profitable and this one wasn't. And so you might say, well, I'm not going to do that one again. In reality, if your accounting was good, that might not be the case at all. And so the thinking is driven by the information. If the information is bad, the thinking is going to be bad. The decisions are going to be bad. Yeah,
and that's the most important. Now, let's talk about more of that in the next segment. Decision making as it relates to accounting and financial information. We got to go to break. It's Mike Manahan, BizRap Radio. I'm here in studio with Gene Sciliano. CFO for Rent is the company. CFOforrent.com is where you find him. Check out his great books. You can buy them on Amazon and Barnes & Noble. But we're going to be back right after these messages. And welcome back to Biz Rap Radio. It is your host, Michael Manahan, and thank you so much for joining me today. If you just tuned in, if you just started listening to the show, I am in studio today talking with Mr. Gene Sciliano. He is the president-owner of CFO for Rent. CFOforrent.com is where you'll find his website. He is also a published author. You can go to his website, find out about his books on financial strategy and accounting, and how you can adopt some of these things for your own small business. And again, Gene, thanks for joining me in the studio.
Thanks, Mike. Great to be here.
We've covered so many good topics. Gene, you were mentioning something about the right and the wrong employees. What did you want to say about that?
Yes, you and I talked earlier in an earlier segment about sometimes problems that occur in the accounting department aren't the fault of the employees. They're the fault of unreasonable expectations or bad systems and processes, and that's often true. It is also often true that it is the employee that is a problem, someone who doesn't have the right level of expertise and is in the job because someone who didn't understand how to qualify people for the position put them in there, and they are the problem, and that does happen. So employers very often, I find, are reluctant to let go of those people, both because of tribal knowledge and because that confrontation that says it's best if you go find a job somewhere else where you can be of more value because you're not being the kind of value we need here, that's challenging. And so we find employers very often find other ways around that, much of which is lowering their expectations, which is the worst possible option they can take. Mm-hmm. The nice thing about our service is that we effectively are the expert from out of town, and he can come in, or she can come in and make a recommendation that this person needs to be moved to another position, or maybe we should help them find another job outside the company and bring someone who really can do this. Those kinds of decisions, which are challenging for business owners, mm-hmm. can be made very effectively by my team.
Yeah, and that's so true. I hate the idea of bringing in the expert from afar to can people, but to rationalize a workforce, I think it really does make a lot of sense. And one thing I've discovered about a lot of accounting departments, and Gene, maybe you give me your thoughts on this, but sometimes the accounting department is so busy doing the accounting that nobody within the department is doing any thinking about the accounting.
That's good comment and true for sure, because business owners very often just want someone to do accounts receivable, someone to do accounts payable, someone to do the inventory control and the fix. They want the tasks to be done, mm-hmm. and if the tasks get done and the software they're using spits out a financial statement, which is financial accounting, as you mentioned, as opposed to management accounting, mm-hmm. they think that's what they should get. And in fact, they should get a whole lot more than that. That's the managerial accounting side. That's the look back and look at the information. If you have an accounting department that is basically people doing the tasks of mm-hmm. accounting, mm-hmm. you don't really have anybody there to look at the whole picture and say, this is what it tells us. And yes, my guys that's very important for them to do that. They don't go in with the idea of we got to replace these people. They go in with the idea, let's see what we've got. Mm-hmm. And how do we make the company better by understanding what we've got?
Yeah, that makes a lot of sense. Something I've experienced as a consultant and working with many companies is I'll get called by a company that gets some issue or problem. I go out, and the owner or the president is there. He's holding a meeting. We're in the conference room, and he's got himself, and maybe he's got his sales manager in there, and he's got his production manager in there. And there's no finance person in the room. And I'm like, how can we have this meeting if you don't have a finance person involved in your decision-making and involved in your strategy and how you're going to move your company forward? It's almost like, well, those folks in the accounting department, they're kind of an afterthought. But I think if you want to be a successful business person, you really have to bring that financial management side of the business. You got to bring that into the boardroom with the rest of the executives.
Yeah, you really do. That's right. Boardroom is one example. Banking is another example. If your banker comes to your business and you want to negotiate a loan or any relationship elements, and there isn't a financial person in the room, the banker knows that's a big clue. There isn't a financial person in the company.
Right. And that is really important. By the way, if you're listening, if you are a business person, you're thinking right now, gosh, I maybe need to have a little closer look at what's going on in my accounting department. Maybe a solution is a part-time controller or part-time chief financial officer. Maybe the solution is just having somebody come in and review what you're doing and give you some recommendations. You can, of course, contact Gene at CFO for Rent. That's CFOforRent.com. And, of course, you can also contact me, Mike Manahan, at bizrap.org, bizrap.org. I do a lot of consulting work as well. Gene and I often team up on projects. We'd love to hear from you. We'd love to see if we can help you with your small business. And when I say small, by the way, I'm talking in the terms of what the government talks about in terms of small businesses. I think the government classifies any business that's like something like 300 million or under as a small business. So you don't have to, if you're a company that's doing 50, 60, 80, 100 million, 200 million, yes, we can definitely help you. If you're a company that's only doing 2 or 3 or 4 million, we still might be able to help you. So better off to make the call, see what we can do for you. And if we can't help you, well, we'll tell you we can't help you. It's as simple as that. Gene, we got a couple of minutes left here. Any parting thoughts for the listeners today?
Sure. Reflecting on what you just said, among the services that we provide for folks is not just getting in and managing the accounting department, but very often our role is to teach the business owners how to understand and use the information. So we have a separate service that is coaching, one-on-one. Let's help you. Let's identify the areas you don't understand and prioritize them in terms of what's the most valuable for your business. And then I will, in effect, act as a solo instructor, guide, coach to help them understand how that works and why it's meaningful to their business. And that's a coaching service that we provide not only to CEOs and business owners, but very often there will be a lightweight CFO or controller in place. And the CEO recognizes they need to be more. He doesn't want to get rid of them and go to our service or something else. So he brings us in to coach the CFO so they can be all they can be.
Gotcha.
And those things are very valuable.
Yeah, it is about education. The financial department in any company produces a lot of information that can be very valuable in better managing the enterprise. But you do have to know how to interpret it. You have to know how to use it. And Jeannie, you've probably seen this. It frustrates me so much working for a client, and I've cleaned up their financial statements, and I produce a fabulous financial statement with all sorts of meat and detail in it, and they flip down to page 3, look at the bottom line, and that's all they're interested in.
That says there's work to be done.
Indeed. So if that's you, give us a call. Give Gene a call. CFO for Rent, CFOforRent.com. Again, this is Mike Manahan. I'm here with Gene Siciliano of CFO for Rent. Want to give out his contact information once more. It is CFOforRent.com. And if you think that maybe a part-time controller, part-time CFO might be right for you, give Gene a call. Gene, thank you so much for being with me today.
Great to be here with you, Mike. Thanks very much.
You're welcome. Well, of course, this is BizRap Radio. We are fixing the United States of America through a fundamental concept that individuals pursuing their own economic interests in free markets will create more prosperity for more people than can ever be achieved through government regulations and a planned economy. It's Mike Manahan, BizRap Radio. Thank you so much for joining me today. I really appreciate my listening audience. And we will be back again next week with another edition of BizRap Radio.